Hello, it's your mentor Sadok speaking. Today we pass through the lesson of how do we master our trading psychology. Okay. As we all know that most of traders, especially the beginner traders, they are mostly affected by their psychology that makes them fail to move on through the cycle of trials and consistency. So at this course, we'll first look on four key concepts. Concept number one is FOMO. FOMO, this is an abbreviation of fear of missing out. Fear of missing out. And the second, we will look at revenge trading. Revenge trading. And third, we look at over trading. And lastly, we will look at fear. Here to revenge trading. Okay, let's add the last thing we call greedy. Greedy. Okay. On our today's lesson, we will look at these three things which make most of traders fail to get out of the cycle on how to master the trading psychology. Okay. Why do most of people fail at this concept? And a simple translation say, emotions become a burden to most of traders because they are trading the money in which they are in need of. What do I mean? Most of traders are investing the money in which it's the parts of their usage. For example, people are trading their pocket monies. I mean what? You can find people, they are depending, for example, on $20. This $20 is the only cash on which he or she has. So depends on this same $20 to feed. The same $20 depends to push a living within a short period of time. Now, what makes this retail being tough? It's because people are investing their last money. Here I talk on the criterias of beginners in this industry of Forex. People are investing their money in which they depend. For example, somebody invests $20, in which this $20 depends to get money to feed, money to pay the small basics. Now, what really happens when he or she loses this $20? That means this individual will be under a great economic depression. Do you see? Now, when investing the money in which yourself, you are in need of it, will create for you a strict environment, an emotional and stressful environment for you to trade. What do I mean? Somebody's trading thinking, what if I lose this money? How will I make a living in this short period of time? Yet it's the last money I have. What if I lose this money? Where will I get another money to deposit? So do you see where stress really begins? And why are people getting stressed? Have you ever thought of a difference between when people or an individual is trading a demo environment, and when an individual is trading a real environment. I mean what? These two basics, they create the toughest moments to beginner traders to get out the box of mastering their psychology. What do I mean? Demo accounts were created for running purposes. For running purposes. And when you consider them for this light purpose, they may lead to your growth. But what are most traders doing? Most traders find out they are only pressing executions. For example, somebody is buying an order without even making analysis why he or she has bought. Somebody is just pressing order, no stop losses, no take profits, just leaving the order hanging. Prove me right or wrong. This kind of person, even if the trade it is in loss, he or she will not cross it until when it comes to profit. And this same criteria, it's quite different when you're trying to trade a real account, because most of we have limited equities. I mean what? Trading is a process. Trading is a process. Nobody began with only having $10K. Nobody having $1K. You find out most of we traders, we come out from the cycle of growth. What do I mean? We grow $10. We trade this capital a long period of time until when it grows to $100. So finding out when you grow this small account into $100, now you can afford $50 to $100. Do you see? You get out the cycle of $10. Trading consistently on this $50 to $100, you find yourself having $500. $500 to $1,000, $1,000 to so on. So finding out, it's the matter of growth. Now, how will you grow at these stages? Yet the psychology is really disturbing. Now, today I prepared some few tips, few concepts to share with you on how will they help you to master your psychology when you are trading in forex markets. So I came out with almost like 15 areas where you need to make improvements in order to grow. Okay? The first area, I'll deal with emotions. As we all know, in our bodies, our brain is very sensitive to two reactions. Reaction number one, we call fight. And reaction number two, we call fright. Why do I like to speak on these two areas? Fight or fright? What do I mean on dealing with it? As we all know, the results of any action, they are the outcomes of we ourselves. Okay? What do I mean? You are the one who you can master your emotions, nobody else. Meaning that when you have a bad trade, you can either decide, one, to take it or to leave it. Two, to never test it. What do I mean? You must understand the reasons of why are you executing the entry. Mastering your emotions, it deals with two criteria. Either you fight with the condition or you fright. These two catchment areas will help you to grow on your financial journey. So, how will you manage your emotions? How will you manage your emotions? Okay? Yet emotions, I divided them in two criteria. We have bad emotions and good emotions. We have bad emotions and good emotions. And good emotions. These two things are quite relative to your trading journey. What do I mean? We say Forex trading, it's 70% psychology based and 30% strategy based. Strategy based. So, how will you deal with these two catchment areas? What do I mean? Starting with the bad emotions. Your moods really affects your deeds or your do's. What do I mean? Have you ever figured out why the day you're stressed, why the day you're depressed, things work badly, or it may seem like things don't work? The day you are at your highest or hunger point. So what I try to advise, the days when you have bad emotions or bad moods, don't ever try to trade because they will really affect your trading journey. Okay? And we also have good moods. Why do I speak on good moods? The days you're joying, the day you're celebrating, the day you're enjoying. I take an example. How do you manage the situations when your trades are running in profit? When your trades are running in profit, how do you manage your moods? How do you manage your feelings? How do you manage your emotions? You know, holding loss is quite easier than holding profits. These are the results of an emotional drive trader. What do I mean? You can find a trader is pressing his order with the stop loss of $10. Stop loss of $10, okay? Or take an example of a trader who is not using stop loss at all. Places a trade and a trade lands, let's say, negative $40. Now take an example, your capital is of $50 and your trade, only single setup, lands negative $40. First of all, your psychology will be disturbed. You'll be thinking, oh no, I'm losing my money. I am blowing my accounts. So as you can see, the first thing is that you have over-risked a large amount of money. So finding this trade that went in negative $40, when it comes into profit of even $2, you find this trader is closing the trades because of what? He's afraid to lose his or her money. So you can see the moods, emotions. So whenever there's real environment, whatever involves the real money, it contains emotions. So you are the only pilot who to decide the emotions. You are the only pilot who to calm emotions. So what do you do when you're in good mood? when you're in good mood. For example, when your trades are in profit. You know, most of people lose the winning trades just because of mood swings. Okay, I will speak forward on how to overcome these areas. Okay, so how do you try, or how will you manage to control your emotions? I came out with some few solutions on which they can help you to overcome the emotional issues, which includes overtrading, over-leveraging, over-risking. Okay? And what are the solutions that I came with? I tried to figure out that how will you try to overcome these all emotions? Number one, is try to set alarm on your analyzed area. Try to set alarm on your analyzed area. What do I mean? You have made your analysis. Okay? You have made your analysis that, oh, my price is going up, okay? And this is my area of liquidity, okay? And I found out my orders at this area. For example, you put your pending orders here, okay? Then set an alarm. Set an alarm. Because all this battle area where the market was moving upward, it has a lot of liquidities to grab. So when the market is coming to fetch out these liquidities, you will see a lot of structures. Here is whereby people get fake outs. Price may come and give you a change of character. You believe that it is an upward trend, yet here down, at first you add your order. You know that price has to reach here. Just because you see a change of character, you want to come and participate this internal move. Finding out price will give you few pips and price fetches you out, yet coming to activate your orders, the ones that you got before. So trying to avoid these noises, trying to avoid this battlefield, set alarms to your order areas or to your liquidity areas. This will help you to avoid staying to the market or staying to the chart. Staying to the chart a long period of time. What the second thing I tried to figure out, ask yourself, why you began. First of all, ask yourself, is it a good trade? The trade you are participating, is it a good trade? Does it fit your criteria? I'm not here to speak about criteria of a trade or of a setup, because I believe on your mentors have already given you the lights on how to analyze your setups. So first of all, you have to ask yourself before execution, is it a good trade for me? This will help you to figure out either the trade, is it supportive or it's not supportive on your side. Okay? I came out with the second important area we call acceptance. Acceptance. What do I mean on the term acceptance? In the Forex market, you have to accept everything. Accept everything the way it is. Accept everything the way it is. What do I mean? You have to accept the wins. You have to accept the losses. The losses. What do I mean? When you lack acceptance, you will become the victim of psychology. Keep in mind, how can you master acceptance? How can you master acceptance? How can you master acceptance? The first thing you have to accept that Forex business, as other business, there's wins, there's losses. Setting your mind to accept losses then will make you accountable for the losses as the learning purpose. So you have to teach your mind to accept that on the trades I take, there are some will win, but also there are some that will reject. There are some that will prove me wrong. So how will you try to control these losses? So in order for your mind or your mindset not be disturbed, you have to minimize your losses. How will you minimize your losses? One, you have to ask yourself, do I have a trading plan? Do I have a trading plan? A trading plan, I term it as the map of Forex trading because it will direct you on what to risk, what to gain. Okay? So, on top of acceptance, I came to provide the trading plan as its category, its subcategory. So as to not disturb your mindset, you must have a trading plan. You must have a trading plan. On other periods behind, I tried to explain on how to create a trading plan in relation to your capital. Okay, so when preparing a trading plan, first of all, you have to understand your capital. What's your capital range? What's your capital range? The second thing, you must understand your risky to reward ratio. Here, I want to elaborate a little, okay? I advise some of my students to at least try to use 1:4 to 5. 1:4 to 5, most of setups, they are very likely to give you 40 to 50 pips very early, okay? So it regards to how many dollars do you risk. Let's take an example. You risk $10 for a setup as your stop loss, $10. What will be your 4 to 5 ratio? You get $40 to $50. To $50. So trying to do this thing constantly, and when your trading plan tells you that my risk is only $10, don't ever extend to 11 or 10 point dollars stop loss. Try to have the same numbers each and every trade. So trying to create your risk to reward ratio, we have the following criteria. First, make sure you risk low. Make sure you risk low, and the reward should be bigger than the risk. 1:3, it isn't bad. So in trading plan, the thing that you have to consider, risk low. Risk low, but aim higher. Aim higher. Whereby we want at least you get the ratio 4 to 5 of your risk. When you have a clear trading plan, I elaborated on other periods of trading plans. You can decide for example, a capital of $50. For me, I only want, let's take for example, I only want 6 setups. 6 setups. Now these six setups, I provide at least you are a standard or a good trader. But when you are beginning, at least give yourself more chances. Okay? So are the 6 traders, these 6 trades or 6 opportunities, different opportunities. Trying to be profitable following the trading plan, I recommend you or I advise you, okay, on the 6 trades, just win 2, lose 4. I know you'll ask me, now when I win 2 and I lose 4 trades, why the losses will be more great than the wins? Okay, I give you the simple example of trading plan. Let's take a trading plan of 1:5. Okay, so $50 as your capital, $50. So on the $50, let's take your first trade. Your first trade was a lose. You have to divide, okay, 6 opportunities. Divide your capital, $50, you divide with the 6 trades, meaning that your every trade should have a stop loss of $8.3. $8.3, okay? Then let's take your first trade, you have lost. Second trade, you have lost. Third trade, you have won. Okay? Those are the first 3 setups. Okay. The first trade, you have lost. The 5th trade, you have won. And the 6th trade, you have lost. You have lost 4 times and you have won 2 times. Then how will you be profitable? With your capital $50, okay? Okay, now let's take these are the 2 losses. So put your calculations. $8.3 stop loss. You have lost. So here it will be 16.6 loss as your net loss. So take from your capital of $50, then you subtract. So your capital will be 33.4. Okay, then you have 1 win. Come on, your stop loss is 8.3. Then you have said your ratio is 1:5. Multiplied by 5. So just this one take profit of 1:5. It gives the profit of $41. So from your 33.4, your current equity, add $41.5. $41.5. Then what will be your now equity from the 3 losses and one profit? So you will be at a profit of 74.9. So you see, only 1 win has cleared all your losses, and you've been in profit of almost $24.9 profit. Okay, the next trade you lose. So from your current equity of 74.9, subtract your 8.3. Your equity will be $66.26. Okay, your next trade you won. Okay, so from your stop loss of 8.3, just multiply it 5 times. You have got another 41.5. 41.5. You add from your current equity. So your equity will be $108.1. Then the last setup, you lose. So from $108.1, just minus your 8.3, then your equity will be $99.8. $99.8. So you will be with the profit of $49.8. So you can see now these are just two wins and 4 losses. What if your winning rate be 50%? 50%. Then how profitable will you be? I think now you can get the picture. So when you have a good trading plan, regardless of the numbers of losses you get, just the very few profits, the very few profitable trades will put you into profit. Okay, so that was the matter of trading plan. So I came into another category, number 4. You have to ask yourself why. Just understand your whys. Just understand your whys. What do I mean? Ask yourself, why did you begin? Why are you trading? Why are you trading Forex? So you'll find out most of your reasons. I trade because I need financial freedom, I need to back up my family, so on and so on. So when you understand your driving force of why you began trading Forex, then it will be a fuel for you to not give up. So I came out on the 5th area, or the 5th trip. I want you to risk small. Trade small. Why do I need to trade small? 1, to avoid fear. To avoid fear. What do I mean? What do I mean? I gave a simple example. Just take out from your capital of $50, you risk $40. Meaning that once this setup of $40 as a stop loss hit the stop loss, your equity will be only $10. Now, what can you do with this $10? Yet you have lost $40. This will disturb your mindset. So as to not disturb your mindset, as I've shown you in the previous example of trading plan, that on the capital $50, even when you lose $8, you still have the backup. Of $41.7. So this $41.7 can still do more wonders. So as not disturb your mindset or psychology, you have to just risk small to avoid we call fear bias or loss bias. Okay. Then the next category. So as to improve your advancement, then trade light setups. What do I mean? On trading the light trades, if your strategy tells you that it's a light trade for you to buy or sell, then do it. But if your strategy denies, meaning that you are forcing your strategy, don't. You have to accept the outcomes of a strategy you use. Okay? So the next tip, know your numbers. Know your numbers. What do I mean? What do I mean when I say know your numbers? As I spoke before on trading plan, you have to create the constant numbers on stop loss, constant numbers on take profits. For example, on a trading plan, it tells you 1:5, then do it. Don't ignore your trading plan. Follow your plan. So if your risk is $10, your trading plan tells you your take profit should be 5 times of your risk. So when your trade reaches the value of $50, put your take profits, then get out of the market, do other things. This means what? You will be already participated your chance. But what tries to affect most of traders is to ignore their trading plan. You can have the good setups, learning even profit of $100. But remember, the market is full of orders, and what marks the flow of market is order flow. So you can find in the morning you had a profit of $100. Later at the noon time, you had the profit of $5, even sometimes hitting a stop loss. So trying to have constant numbers that once I enter here, my take profit will be at 5 times where I entered. Put your take profit, get out of the market, do other things. What next I try to prepare for you is don't trade a strategy that you have run it very recently in a live account. Don't test the strategies in a live account. Don't test strategies in a live account. What do I mean? You can find out you came across to a mentor. You came across to a mentor and gave you the knowledge on how he or she trades. And how he or she makes a living through a strategy. Then you get admired with the strategy and try to learn it. Then first of all, turn into the learner's period of using demo. Use your demo to run. Use your demo to practice that strategy. Because what do I mean? When learning a strategy, there's what we call measuring winning rates. No strategy that is 100%, correct. So at least the strategy that works 70%, to use it. So what if the strategy that you have learned only works 30% and you have tried it in a live account, meaning that you will create a lot of losses in your account that will distort your mindset. So try to avoid testing the new strategies in a live account. What I came out next is be real. Be real, or I mean realistic. Realistic. On this area, what do I mean? You have to accept that you will not master the business within 1 week, within 1 month. You have to accept that you will not be profitable within 1 day. Just trust the process. Success is the process. So you have to accept. I give an example of one of the world's billionaire, Elon Musk, with his investment on spaceship. He tried a lot of times. But he never gave up on his ideas. This gave me the 10th area that says never stop improving or running. Never stop improving or learning. Okay? This, I got it from an example of Elon Musk's life. When it improved or it generated his criteria of SpaceX, he tried a lot of times, but he failed. He never gave up on his idea. He tried to improve on the mistakes that were going on through other trials until he made them. So the same applies to the Forex journey. You have to never stop improving. Never get limited. Don't limit your mind on learning new concepts. Learn new concepts, practice them in a demo environment, measure their winning rate, turn into a live environment, then trade. Okay? Then another area, you should be organized. Learn to be organized. What do I mean in this area? You have to learn to write down the things. Just be someone who you are more fluent with the notebook. What works, what doesn't work, light. The stop losses you've got, go and find why have you got the losses, right? So as you may not repeat the same mistakes on the coming days. What next I prepared is trade what you see. Trade what you see, not what you expect. Trade what you see. What do I mean? The market is full of orders and order flows. We learn a lot of things from our strategies. But what if the thing that we expect to happen in order to execute the setup of an entry based on our strategy doesn't happen? What should we do? We'll force the trade. You will have to accept that you have no control of what is happening outside your vision. Unless if you force the situation, you will suffer. You'll be entitled. You have to accept that you can't control on how the market should behave on that day. But you can control your leasing. You can control your rules by following your trading plan. So you should focus on what you can control. Okay? Then I came out with another area. One of my mentees told me or asked me of what you call break even. Break even. Okay? That Where should I put my break even? You're finding somebody has a clear setup the market provided, a clear setup. This was easily put it area. And when the market came, tap the entry, it went. Somebody has placed the order and has placed it, the stop loss at the entry point, trying to avoid losses. But what I try to teach on the matter of break even is that the market has the every reason to come until this area. It has the reasons. As long as here there are other orders left, market can come until this area unless it doesn't validate this area. It doesn't invalidate this area by closing below. If it doesn't, market can come until this point and go where it wants. So the matter of you trying to put a stop loss into an entry point, you are trying to limit the market that it should not reach here. So what makes it stressful is that market comes, it hits your stop loss, then moves your direction. This thing will distort your mindset. This thing will make you grab your peace inside, because here's where people try to force the market, try to blame the brokers that they have manipulated you. Let me tell you something. We manipulate ourselves in the market, but nobody manipulates you. So you have to accept that if the market, this is our area and this is our highest point, put a stop loss outside the point, 1 to 2 pips of the structure. Then wait until the market creates a new structure. If the market creates a new structure, then you can adjust the stop loss to an entry point. But if no new structure created, don't put your stop loss into an entry point. So lastly, the most important, I want to remind you that the money we make is the function of hit rate. Hit rate are the numbers of the profits that hit our take profits. So the money we make are the results of hit trades and risk to reward ratio. But you find that most of traders only consider the hit rates, forgetting of the risk to reward ratio. Here is where it comes out. I give an example. This is hit rate. You have, let's take 10 trades. Then on 10 trades, let's take 6 trades. I've hit your stop loss. I've hit your take profit. Then on the matter of risk to reward ratio, 4 trades have hit your stop loss. But what's the value of these 4 trades? If the value of your hit rate is, for example, we say then $50, and the value of your stop loss, let's say, is $80. So you can see your risk is higher than your reward. So never expect to be profitable at this level unless you end up burning out your accounts. So as to be profitable with this money function, first thing, your hit rate should be higher than your stop loss. Then that's how you'll make profit in these markets. Just a reminder, at your level or when you're beginning, don't try to set the daily money that you should earn. Meaning what? The day when you fail to reach the amount you set daily is the moment you will start to force the trades. You start to force the setups so as to reach your daily, target. At the end of the day, you find yourself losing a lot of money. So on the areas that I have tried to elaborate, you find they touch out these areas: fear, greedy, overtrading, revenge trading, revenge trading. Don't try to trade returning the money that you have lost. You know, once we get lost, that's the moment we begin distorting our mindset. Somebody's trying to think, at least I wouldn't trade this setup. My money, I wouldn't have lost it. So the moment you try to think of it is the moment you destroy your self mindset. So just accept the loss. Take the loss as the opportunity. Then give yourself strength that the market is full of opportunities. The coming opportunities will be very profitable for me, will be very functional to me, will give a lot of money than what I have lost. So don't try to trade to return the money that you have lost. Don't try. Don't open the trades every time you need to trade. I mean over trading. That can be overcome as what I said of setting alarms. Fear of missing out. Somebody is just being stressed out or being left. The entry point being not triggered. No, just be sure of what you're doing. Just set if you are pending orders, then get out the market. The order flow will prove you right or wrong. If you're right, your order will be triggered. Just let's learn to trade these liquidity markets and the money will flow. So every money we make on any time frame is the result of these three things. One, the method. What method are you using to make money? What is your strategy are you using on that time frame? Two is to manage yourself. Manage yourself. If you fail to manage yourself, this meaning emotions, if you fail to manage yourself, the bad and good moods, then you will never manage the third thing, which we call manage your money. Managing your money. This includes risk management. Then also proper usage of money. So on today's lesson, hope you have got something that will help you to increase your profitability, will help you to overcome the trading cycles. Don't forget to subscribe, to like and comment. Also, invite the friends, invite the fellows at my YouTube channel to learn more on financial areas, to gain more advices on financial areas. Now, your mentor, Sadat.